possible impending slowdown for the economy and what that might mean for consumer decisions.
Hi, once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Always a treat to have you with us as we take a look at what's going on in the ag world, and in particular on Wednesday with the ag markets. Make sure you like these videos, subscribe to the videos by clicking the bell icon, and share these videos with others as well as we continue to grow our audience thanks to you. Today, I have Joe Camp with me. He's with Comstock Investments. And we're going to take a look at Wednesday's market action. Looked like a split decision here, Joe. We had a little weakness in the corn, especially in soybeans on Wednesday, but the wheat kind of came back. I was kind of intrigued by that. So from your perspective, what did you see driving them in opposite directions today?
Well, that's been the trend here as of late, that there hasn't been a uniform trend among the primary grains. We're talking about the corn and the soybeans and wheat. As mentioned again today, different directions. That's been the case in an even bigger fashion over the last couple of weeks as we talk about corn oftentimes being caught in the middle. It was wheat that broke down to new lows, at one point being the anchor. I think that was a couple of visits ago with you, Marlon. We were talking about that. And then it was soybeans breaking down to new lows, and that trapped the corn here. We have today the corn and the beans now down, but now the wheat here. And this is understandable at this time of the year. Wheat's doing its own thing in the sense of its position within its crop season, advancing the spring harvest, putting away those northern hemisphere winter crops as well around the world. The row crops we know are a different story, and the divergence between corn and soybeans could persist because of differing production expectations. It seems to be the feeling all of a sudden, maybe following the crop tour last week, some of these analysis coming out of the past crop report, more room to come down potentially, it would feel like, on the corn yield nationally than for the soybeans. And that's something we're going to have to watch going forward.
It almost seems like this soybean yield came out of left field, because I never heard that much in the way of optimistic production for soybeans during the course of the year. But it seems like it has just really ramped up in the last 3 or 4 weeks now.
In part, there was rightfully respect of the potential yield impact, the negative limiting impact that would come from late plantings. And that's still potentially an issue we've got to watch, but it's becoming less and less of a concern that it would take away from top end yield because of so far the extension of generally favorable conditions in a lot of areas later into the season, and the outlook mostly supports the same. Now, coming in to these last couple of weeks, and normally at this time of the year, there's going to be some talk of risk about frost freeze. We had a cooler trend into the first couple days of September projected, but so far not low enough in terms of temperatures that would be a real bullish risk point for the market. And so we think about finishing this crop out well. We get some of that data like we have had recently on pod counts, have some boots on the ground, talk with our farmers out there, and it feels like a big bean crop all around for sure.
Well, when it comes to this wheat market, there was some information out of Stats Canada, wasn't there, that impacted the wheat trade on Wednesday?
They did find production estimates that were lower than expected, although they were also including some numbers on last year's crop that were revised higher. Overall, when you took the headline lower than expected production number going forward for Canada, added that to another tight type of production estimate coming out for Germany, adding that to the recent talk about how low the crop size is in France, and then also as well into the Black Sea countries, more revisions, lower expected for Russia potentially going forward. All of that was a combined supportive type of influence, knowing that global production, as it would seem for wheat, is continuing to be on a tightening trend heading into the rest of this new marketing year.
Joe, there seems to be a lot of consternation about transportation of the grain crop this year. What's going on anyway?
Well, here we go again on, for one, Mississippi River water levels, and concern that low water levels are going to be an issue again this fall. And this would come after the last couple of fall seasons dealing with that. Not the same type of widespread drought this season, but enough trouble in spots that are pertinent to the Illinois and the Mississippi rivers, for example, that there is some concern about how that might impact trade demand for one going forward. We know that low water levels, if they cause higher barge freight, or if they preclude traffic to a large degree, you're going to see that reduce the demand for those Gulf export bids. And so something worth watching again as we enter into the export campaign going forward. The latest, though, pop up for a logistical headache potentially is this news that the BNSF Railway has suspended for 30 days rail service into Mexico. And this would follow a government suspension of some rail crossings in December 2023. We've got a backlog of grain exports sitting in Mexico, not enough resources on the Mexican side, Border Protections Agency that's stretched thin as well, and a lot of resources dedicated to trying to slow the flow of illegal immigration, for one. And so all of that relates back to what we've learned here in that the BNSF, so a big source of grain exports into Mexico, has put a pause for at least a month on new grain exports coming on shuttle trains. And so particularly, we're going to think about corn exports to Mexico being affected. Estimates from the Mexican side would suggest that at risk here over the course of a month would be more than 1 million tons of grain, including up to a third of Mexico's imports of U.S. yellow corn.
I wonder how they arrived at 30 days. I mean, what do they think is going to change in 30 days?
Some optimism that there can be a clearing of the backlog. They know how many cars are sitting and waiting to move, and then probably somewhat of an arbitrary decision, knowing that they could extend it or adjust it when it comes to the end of that time frame. A lot of uncertainty, though, regarding this, and something that absolutely needs to be watched. We can talk about current implications for just the halting of that service, but then long-term influences and linking in to, mind you, the upcoming election and how we know trade relations can be sensitive regarding Mexico.
Well, I know where I came from in the Central Plains. I mean, that was a massive market for corn in that part of the country there. We always filled unit trains heading toward Mexico all the time. I mean, I would think that would throw a colossal monkey wrench in the basis out there.
Absolutely. And if I could show a graphic I was looking at earlier, I checked in on accumulated corn exports in particular heading to Mexico, and we can see the current year in the red, the 5-year average in green, along with the last year in blue. And this is just a chart that blows me away. I mean, makes me glow just talking about it. But record large corn exports to Mexico, huge demand, helped by a couple of seasons of drought in Mexico, but also favorable currency terms. We've got the new NAFTA as well in place to build off of. And we see what's at risk, though, if we're going to see any disruption, whether it be political or otherwise, going forward. And you mentioned, where you're at in the past and how that influences the marketing decision. This is something I'm thinking so much about right now because of how it's been, which is that the Western Corn Belt has generally had stronger basis in one because those local ethanol and renewable diesel producers are competing very heavily with that draw from the South, both feed demand, which we know about, and now that shuttle car train demand that would otherwise pass those feeders in the South as well, heading to Mexico. So it's a big deal.
Well, of course, we're coming up on the end of the month as well here. What's that going to mean as far as marketing changes?
Well, interesting to think about that in the segue on export demand and talking about how relatively much stronger it is into the Western market, including those corn exports to Mexico, even better demand out of the Pacific Northwest when you have some Mississippi River issues. Also, when you lose market share for exports to China, we've actually got more bushels flowing to the Pacific Northwest ports. We've got gains in demand from countries like Japan, Colombia, South Korea. All those can be accessed from the Pacific Northwest ports. Well, I bring that up thinking about the end of the week because at the end of the week is First Notice Day. It's the delivery period opening up for these September grain futures. And right now, for as much demand as we might think is still there in the West, there isn't that demand for at least delivery along the Illinois and Mississippi River system, like the CME futures are based on. And that's why we've got such historically wide spreads. We're talking about a very big split, again, between that stronger market in the West and the relatively weaker East, which would include this delivery market. So it's a very important subject. It leaves us thinking about what do we do into the end of the week when these September futures go off, knowing that one, we're going to be into the new crop contracts and all decisions based on those numbers, and those numbers being, because of those wide spreads, a lot higher where the September futures are going to go off. And so that leaving risk that the new nearby contracts will have to come down and close those expiration gaps. We'll see how that fares over the next couple of weeks.
I think that's been a topic of discussion as well on our premium segment, hasn't it?
We do have on our morning Comstock report for premium subscribers an outline of some decision points that are going to occur for farmers that might still be hanging on to old crop reownership type positions or old crop in general, and what to do about transitioning from these September contracts now into the new crop focus, and listing out a couple of different alternatives that you can talk with us about. The consideration put into the report I appreciated reading was the fact that, hey, everybody's different. We just talked about the difference between the West and the East and all of the moving parts, whether your market is ethanol or exports or feed, et cetera. You've got some options. And so that's what we're trying to explore here as we come up into a very important period for the market.
Might be worth checking out for more specific recommendations. Yeah, I'm glad you pointed that out. What about the livestock trade? It seemed to be, as I like to say, meandering on a Wednesday here. I don't know if we accomplished much or not. What do you think?
Relatively muted compared to how we have been trading in bigger chunks for these livestock contracts. We could bring up the delivery period, I should think as well, for the live cattle, and specifically how August live cattle futures are going to head into expiration in just a few days. Now sitting close enough to the cash, still waiting to now see where the rest of the cash trade is going to develop this week. But you do look at an August contract just a quarter below 184. That would be, just a bit below where the cash averages have traded, but still a considerable amount, say $5, a little bit more above the next up October contract. So that would be the reverse, where there's some premium in the nearby. We're going to roll over into a lower priced next month futures contract, and then see whether or not the board has more urgence to converge up towards the cash over time or the other way around. But lately, all of a sudden, it's been a rosier opinion for this market, back to thinking about relatively shorter fundamental supply side considerations and less about the nervousness over demand.
I actually heard a commentator that wasn't even in the, let's say, the ag market realm just a couple of days ago, commenting about the fact that they were picking up that there was increasing demand for pork at the retail counter. And I thought that was kind of interesting, just a sign of the times, I guess, right?
That may be. Anytime you think about a possible impending slowdown for the economy and what that might mean for consumer decisions, especially when you pair it to what we're still looking at is near record high beef prices, not too far off on overall cattle prices from where we marked out these highs recently. So there is a competition factor any way you look at it. And the other part of it is going to be, for the hogs in particular, whether or not pork exports can really take off because of what we've been seeing with the dollar coming lower and improving those terms of trade. Exports are, of course, a much bigger portion of demand for the hogs than the beef exports would be for cattle.
And I was looking at an October lean hog chart, and it looks to me, at least on the service I'm watching, it looks like it closed above the 200-day moving average. That has to be constructive, you would think, if it can hold there, right?
Yeah, basically a new 3-month high here. We've gone a long way into breaking the broader downtrend, but still wanting to see the follow through to be convinced it's not just merely an upside retracement in what is still a primary bearish trend. That's something that's going to take some time, but have a much better fundamental approach to this market, I think, than we have over the last several months. Part what we just talked about, thinking that consumer demand will be relatively resilient on the pork side, but also because lower prices have kicked in terms of producer decision making. Farrowing intentions called lower now for several months. There's going to be tightening in that sector, and that can be the cure for low prices eventually.
Well, Josh, I certainly appreciate you joining us today and examining what happened on Wednesday in the middle of the week. So, yeah, I mean, we're just getting real close to the end of the week, the end of the month. And not only that, when we start out the new month, we're going to have a holiday to begin it. So next Monday, there will be no market activity. I want to remind everybody about that. Monday, everybody in the ag trade will get that day off, except for the farmers, of course. So keep that in mind. It's going to be a short trading week next week as we roll over into a new calendar month. Appreciate everything. Thank you, Joe Camp, with us from Comstock Investments. That'll do it for this episode. And for producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time right here on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.